Hello everyone, today's video is all about the high income child benefit charge, which basically means that if you earn above a certain amount, you get the child benefit clawed back, which is now done through the tax system. So the magic number, as it were, 50 grand. Now what's very unfair about this is that if one spouse of a couple is receiving income in excess of 50 grand, the amount is clawed back, until which point you get to 60 grand and you lose the whole thing. Now, consider the situation where, let's say you've got two spouses and both earn £49,999 each. So they've got a combined household income of 100 grand, give or take a couple of quid. No clawback of child benefit for these guys. However, let's assume you've got another couple. One spouse is on 60 grand, the other's on zero, combined income of 60, they get the whole lot clawed back. So quite an unfair quirk in the rules there, but anyway, that's how it is. So, interesting tax case in the courts recently, the Wilkes case. Now what happened with this guy? Basically, he said he got done for this but he didn't have to do tax return, because one of the things in the UK, not everyone has to do a tax return, not like in America where everyone does one. In the UK, it's only it's a reasonable percentage, just several million, but not everyone has to do one. So the point being that this guy just merrily went along his way for many years, received a salary, PAYE, and he started earning over 50 grand, he started having pay rises, and what happened was, because he didn't have a tax return, he didn't know about the fact that this child benefit got clawed back through the tax system. He's not a tax return person, he doesn't need to do one. He was never issued with tax returns, requirement to submit tax returns by HMRC. All of a sudden gets a letter in the post saying, dear Mr. Wilkes, we've just looked at your records and we noticed that you have been earning over 50 grand for quite a few years now, and we're going to claw back all that lovely child benefit that you've received. Thank you very much. She's like, what? Anyway, the whole thing snowballed and it got to the courts, the tax tribunals. And the grounds were this. Let me talk you through the legal principles here. So HMRC basically argued, they said that they had made what's called a discovery assessment. Now, a discovery assessment is something in the tax world where the taxman basically discovers income that should have been charged to income tax but wasn't. So that's what a discovery is. And this thing was all about the technicalities of tax administration in the UK. And the taxpayer, Mr. Wilkes, and his advisors and barristers, they said, hang on a minute, there is no income here to be discovered, Mr. HMRC. You cannot all of a sudden say, well, we're going to invoke the provisions of the discovery provisions because that talks about income that they've discovered. Here, there's nothing that's been discovered. The guy's earned a salary over so many years. Yes, it's tripped him over the threshold for clawback of child benefit, but technically there's no new income being discovered here. And the discovery provisions talk about income being discovered that previously wasn't known to HMRC, which income tax thereon should have been paid. And with this guy, the court said, look, there's no new income here, so you can't invoke income tax. There can't be any tax charge, or the clawback in this case of the child benefit, because there is no income that's been discovered. So the guy got away with it, Mr. Wilkes. He won in the courts, and it went right up to various rounds of the courts, first tier, second tier, high court, and basically the taxpayer won. So then HMRC said, well, we're just going to change the rule. We're going to go to the government and get them to change the law. And that's exactly what they did. So the government changed the law to then make it the case that HMRC can go back several years and go after people who quite, through no fault of their own, didn't know that this rule was in because they don't have to do tax returns, that they didn't know about it. And HMRC can go back several years and go after people who've received child benefit when they're earning too much. So just be aware of this. If you are, or you or your spouse are A, in receipt of child benefit, and B, earning over 50 grand, one of you earning over 50 grand, then this child benefit could be clawed back. And it could be clawed back from several years ago based on the new statutory provisions that were put in place by the government following HMRC's defeat in the Wilkes case. Right, so moving on. What can you do about it if you're in this situation? Well, not a lot you can do retrospectively, but going forward, let's say right now in this tax year, and we are in February 23, so we're about 6 weeks out from the end of the tax year, and you could be in a situation where you are earning over 50 grand and you've been receiving child benefit in your family, and you think, well, what can I do about it? I don't want to get clawed back. Well, what you can do about it is this. Make a pension contribution, a personal pension contribution from your savings, your net income, your after-tax income. You put in a contribution to your personal pension, and that will get you tax relief, but will, for the purposes of the high income child benefit charge, it reduces your taxable income accordingly. So let's just take an example. Let's say you've got a guy who's on 55,000. So 55,000, they're going to start clawing back the child benefit. You'll still keep some because it's to 60 grand where you get to keep some. But anyway, they'll claw it back. But what if you actually made a pension contribution of £4,000? So the way it works with the pensions, and it's grossed up, that £4,000 is deemed to be £5,000, the gross amount. So he writes a cheque for 4 grand, goes into his pension, but it's grossed up to 5 grand, and his adjusted taxable income is now 50,000. Goes from 55 down to 50. Lo and behold, no clawback at all of the child benefit. So that's the number one thing you can do. There is another thing, it's a charitable contribution, and they work exactly the same. But I'll be inclined to suggest that most people would rather put a chunk of change into their pension than give it to charity. But however, there are many philanthropic people out there, and if you do want to put a decent whack into a charitable contribution, exactly the same rules. From tax point of view, it will bring your taxable income down, get you out of that band between 50 grand and 60 if you're just over it, and then you'll have no clawback. So gifts to charity or topping up your personal pension to avoid the high income child benefit charge, basically when you have to repay the child benefit that you or your spouse has received. So I hope you liked this video on the high income child benefit tax charge. If you did, please do remember to subscribe, and as always, I'll see you soon.